You have been looking at gold, pure gold. I want to share a quick quote. On casual inspection, it's easy to conclude that the price of gold has nowhere to go but up after a 4-year slide. We'll look a little harder. Gold has fallen much faster and a lot further before. Matt, I already introduced you as the company optimist, and you're saying, guess what? 4-year slide? It could go farther.
That's absolutely right. And there are two reasons why that's going to be true. One is there's no sign of resurgent inflation, which was originally one of the catalysts for gold's rise, going all the way back to the 1980s. The second is there really is a resurgence of financial assets. And financial assets actually are as significant today as they've ever been. And so those two things together have a third catalyst helping them, and that's the strength of the U.S. economy, which is stronger, more robust than it's been since the financial crisis. And so those three things are what's underpinning what will probably be a long-term slide in gold.
I know you love to talk about how strong the U.S. economy is, and clearly since the financial crisis. Are those feelings not tempered at all since you've seen Janet Yellen somewhat pull back here?
Well, she has good reason to still talk about gradual tightening. The housing market is literally back to where it was before the financial crisis. That's saying a lot. When houses have appreciated to the extent that they have, you are seeing homeowners much more confident than they've been. And that's exactly why the Fed, by the way, on the verge of full employment in the United States, has to be thinking about gradual tightening.
Julie, the Bloomberg.
Yes, and this is one of the charts that actually accompanies Matt's story. And speaking about Fed shares, this looks at the average volatility under the past several of them. Under Greenspan, the average volatility was 102, Bernanke 95, and Yellen just 71. In other words, if you want gold to hedge against sort of turmoil in the market as measured by something like volatility, Matt's point, I think, would be that there's less need to do so because volatility is now at such a low level. And one of the things, by the way, in talking to options traders over the past week or so is that it's been notable that volatility has still remained sort of subdued given the fact that there has been so much concern about global growth. It's been a bit unusual.
Yeah, Matt, one of the phenomena in the marketplace has been China's buying of gold. China has been a big gold buyer over the last year or two.
Yeah, I mean, the gold buyers are not going to go away. But if you want a market to get excited, you want the gold market to get excited, it needs something more than just the traditional gold buyers to be there. And that's just not happening.
Well, reduce it for me, and this may be overly simplistic. Is it either inflation or geopolitical risk, basically, that drives gold?
Okay, here's one very powerful reason or deterrent for gold strength. You have coordinated monetary authorities today like you've never seen before. You know, we've been talking this morning about Draghi and Kuroda, and, you know, if you go back a week ago, if you go back 6 months ago, that was also true. It's going to be true 6 months from now. The central banks today are so much stronger and so much more visible than they were, say, in 1980 when gold made its spectacular run to the top.
So in terms of those who invest in gold, when you look at things right now, it just seems like we're seeing more and more outflows. It's just not a place where investors want to be.
Well, look, last year you made a hell of a lot more in Amazon stock than you made in gold.
I'm just saying it's lost the compelling argument to be a place where one invests. I mean, if you look 10, 15 years ago, it's where you saw many of the most sophisticated investors.
Yeah, and if you look at the 20th century, last 2 decades, the returns in stocks and bonds just dwarfed what you got in gold. If you look at the 21st century so far, the returns in stocks and bonds dwarf anything you've gotten from gold.